Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on Netflix, ticker NFLX. So they have just had their earnings and that's why we're obviously doing an analysis on it, seeing where do we expect to go forward. So off the release, we firstly actually kind of key to note is, we usually be making about $3 a share. This time we only made 12 cents on the share. So again, be a bit cautious seeing that. We did actually have a massive reaction off the news, which I thought was quite surprising. And we did actually bounce up on this news. But overall, what do we expect kind of going forward? What are key supports and resistances we're looking at going forward? So if we do continue to the upside, which is the way we went off the earnings release, around 365, this is our first deviation on the 6 month. So if we're coming into here, this is when I'm flipping a bit more bearish, and that, I would try to look more for a reversal coming into this level. If though we did break this, we have our next level at 385, again, next level. So coming into here, if I was long, this would be my target. If I'm a reversal trader like I am, this is kind of where I'm looking at it a lot more short bias. If we did break that, we do kind of a final level to be paying attention to around 410. Obviously, we do have levels going high, but in the near term, not likely to hit those. So, if we did push up to these kind of highs, we'll make a new video. But really, these are the three key resistances I'd be paying attention to. Obviously, you're always going to want to be paying attention to the key psychological levels. So $400 is obviously going to be there, be paying attention to that. And on the earnings, you can see we did get a good bounce from around 320 to 345, but we weren't able to quite touch that 350. Again, this is going to be a psychological level, especially if you're more of a day trader. This is where big opportunity can be. So if we start pushing back to the upside, again, be waiting for that break over the 345, and then the 350 will be the key one to be watching. Now though, if we start to break to the downside, what are key supports? And what we did actually see, it's basically a confirmation over on the daily. So our first deviation was is around 310. We can see coming into earnings, we obviously broke over it before, coming back to retest that as a support. Again, we didn't really have enough time to make sure it was kind of holding. So again, probably wouldn't have got any size because again, we want to see that confirmation before we take it long bias. But if you did get in maybe a bit of size early, again, we would have been quite nice. You would have been in for that earnings release. But again, always trading anything into earnings is a big risk. It is a gamble at the end of the day. You never know when it's going to go up or down. So again, if you were in, nice. But again, don't be hard on yourself if you missed it. Because again, why would you be unless you really have a reason? Because it is a gamble going into it. Now though, if we start to fall in price, what are we paying attention to? So at supports, we have supports at 270. And this is kind of where if we do start to pull back again, maybe we're looking at it a bit more long bias coming into this level. But if we break that, 235, this is going to be our statistical mean on the 1 year chart. And again, what is kind of the problem I see on Netflix is, like in our videos, we say we don't like to trade between statistical means. And the problem on this one is the statistical mean is very wide. Because we can see on the 6 month, we're at 317. On the 1 year, we're at 235. So really, if we're sticking to that kind of rule, we're not trading anywhere between 230 and 320. So again, a big range there. That's why I haven't really been trading Netflix, because on this release, again, we're too near that statistical mean. To me, there isn't enough reason for entry when I can find another stock which has a better setup. So to me, it's something I'm currently staying out of. But again, if you don't really care if the deviations are this wide, then again, 270 will be that first deviation we're looking at as a support, because it is our first deviation. If we break this, so we do have further supports at 230, which is the first one I would be paying attention to, considering there wouldn't be massive upside on that. Because again, our statistical means at 235, it would be more of a day trade coming into here. Probably not something I look to trade, swing trade. But if we do break lower, 275 and 260 would be great levels, what I'd be paying attention to, and definitely strong swing levels. Anyway, I hope you enjoyed the breakdown on Netflix. If you did, why not drop a like and subscribe and check out this analysis video.